All righty, welcome traders. It is Tuesday, January 9th, 2024. And we'll get into the market recap today, and we'll look at our portfolio, our trades, talk a little strategy here today and what we did, what we added on for our trades on the session. But let's take a quick look at the markets and let's see if what's out there and if there's anything we should be looking at for tomorrow. S&P was down 7 points today. It was down a little bit more earlier, did come back towards the end of the day to finish just fractionally down 0.15%. And overall, still in a decent bullish, uptrend. Is a nice pullback to the 21 EMA, bouncing off of that. Big up day yesterday, a little bit of a breather today. Still fairly bullish, but I'm okay if we pull back more. I think the market's kind of just in this limbo waiting period right now as it just digests everything that's happened. On the NASDAQ, though, it did manage to make some gains on the session. So slightly higher today by 0.2% as the Qs move higher. MACD, RSI moving higher. It looks fairly bullish there as well on the daily. The weekly looking a little bearish. So I think it's a good setup right now to potentially get into some strangles on a bunch of different things. IWM as well, really unchanged on the session after this little bit of a breakout that we had for 2 weeks, and then we dropped it back in. So was it a look above and fail? Or are we just pulling back to the 21 and going to get some more juice going? If we're looking at the MACD and RSI on the weekly, it's falling. If we look at the MACD and RSI on the daily, those are falling, and we're in a bearish PSAR, so it does look a bit more bearish on the IWM. I know Tom Lee's calling for IWM to go crazy this year and be the place to go. Right now, it is not. So we'll see if that actually holds true on the debt year. I don't know if that's actually going to happen. But I think if rates get cut, it does help small caps. But the whole rate cut debate is something new to be seen. If we look at the S&P companies above their 50-day moving average, we did drop on the day, and we triggered a PSAR bearish signal. Now, it's not necessarily means we're going down. However, MACD, RSI are falling. We are running out of momentum, and this thing is really starting to tip over here. Normally, it tips over and gets going a little bit more velocity from up here. It's still just meandering sideways. I think it's just prolonging the inevitable. We'll see if the markets do drop. Put-call ratio did drop on the session as well. And as that continues to drop, we look at some of the charts on that. Let's pull up the put call with the 10-day moving average. As this thing drops, the market rises. As this thing rises, the market starts to drop. And it broke this downtrend that we were in. So really, you are now in an uptrend, but it's not for sure yet. We'll see what happens if it continues to move higher. But if this thing starts to move higher, then you can see the markets potentially moving lower. So this was our original move down into here. Okay. I mean, we could probably even draw it to here maybe, but we'll see. So as this has been moving down, the 10-day moving average has been dropping, market's been climbing, and then are we now in the other, going the other way? Have we started to reverse higher and the market's going to drop? We'll see. It's just one indicator. But again, everything indicates that we are still really overbought. We can stay there for a while. I just don't know where the market goes from here, and I don't have any great predictions for you. So if you tune in here for me to tell you what's going to happen tomorrow, I don't know, and frankly, I don't care. We have made money every single day this year. So 6 trading sessions, every trading session has been a win for us, no matter whether the market's going up or the market goes down. Doesn't really matter. So I want to have a good overall feeling of where the market is, but it's not going to dictate my strategies to me too much. All right, if we look at the US dollar on the session, that was up fractionally, so a little bit of a move up on the US dollar. And then on the 10-year, really just flat, not doing anything. Still in a bullish move here, but just consolidating sideways. I think that's a good thing after this move. We'll see what happens. I still think that rates have fallen. They started to recover a fraction. They can still fall more, but you've already, again, in my opinion, the 10-year is ahead of the curve, already pricing in 4 rate cuts. And I don't know that we're getting 3 rate cuts in 2024, much less 4. So I don't know if the bottom is in Treasury, in the indexes. So in the percentage. So was 3.79, okay, 3.8, was that the low for the 10-year on the year? Maybe. We'll see. I'm not calling a bottom here, but I think that could be a good place. And whether we go up a bit or down a bit, I think you have a good opportunity to trade bonds. So we'll get into bonds in just a minute. Let's look at the actual futures themselves briefly. And I had some members today ask me about the 3 ATR, and hey, what's the 3 ATR? How do you calculate that? Well, the 3 ATR, I use Keltner channels in here. My setting, I do use a 21-day moving average, and I use a 3 multiplier. So I'm looking at a 3 standard deviation from the 21. Right, so that's how I set up these white bands, which are the ATR bands for me. The 3 means it's an extreme reading, overbought, oversold, and from there I'd like to see good reversals. I also look at those as potentially extended area. It doesn't mean we can't break them and go higher and ride the channels higher, but I want to stick outside of them when I'm looking at some strangles. And if you skip this part of the thing and you just want to go right to my trading plan, you're missing the point of how I'm actually figuring out what strangles and how I would want to trade them or other types of trades. So we're looking at 6A. I looked at 6A today. I really would like to put a strangle on here. The problem for me is commissions and fees. Because my account is pretty large, this account that I'm sharing with you here is a $400,000 account. I also have a or $20,000 account, and I also have a $250,000 IRA that I'm sharing. I also have a $1.2 million account, $1.3 million account that I don't share really trades here because we have other people in the Discord that are sharing larger account trades. But it doesn't, still doesn't mean that you shouldn't pay attention to what's going on in the market so that you have an idea of what to put on. Okay, don't just wait for me to tell you what I'm trading. Okay, start to formulate your own trades. How do you do that? Well, you got to be looking at some idea of charts and see, what looks decent. Well, I love 6A, but at the size of my accounts, at a $400,000 account, I have to do so many contracts that the fees are really getting to be a bit prohibitive. I really like 6A though. I really love the Aussie dollar. I think you could put a 112 on here and have a great return. I also think this is a great strangle opportunity here. I think this is my number 1 or number 2 area that I would trade if you can. Now you have the British pound looking pretty similar. Don't love it as much as the Aussie dollar. I think the British pound's a little more unstable. Canadian dollar, I think it can swing a little bit more, but it's not a bad trading vehicle. And then there's the euro, which I do like. And on the day today, the euro was up or was down fractionally. So the euro was down fractionally today on the session as the MACD and RSI continue to drop. I think it's setting itself up for a nice strangle opportunity as well. So that would be another one to consider. Now, oil had a pretty nasty down day yesterday after the Saudis came out and started talking about slashing prices and what they're going to do. And the market, as always, overreacts. And we had a pretty good sell day, down 2.7 points or something. Okay, today, just a fractionally down move, or I'm sorry, a fractionally up move. We recovered a good chunk of that loss. So we recovered about half of that loss today with the oil moving back up like 1.5 points or so. It's after hours now, so I'm not getting the true reading, but you can see here that we recovered more than half of yesterday's drop today. I think it was just overdone yesterday. We'll let things percolate in. However, your RSI just kind of moving sideways, MACD kind of flat to sideways, and the weekly is actually reversed. MACD is heading higher and RSI has been heading higher. So I think the momentum is still to the upside. I still love oil. And I think where we are now with good IVR, so good volatility for the most part, and I think we're looking at, a weekly strong or stronger move up and a daily kind of weakish to sideways. I think it sets up really well for strangle. And if you look at the pricing and you look at these 3 ATR bands, they're starting to bend in, okay, which is a good sign. When the ATR starts to bend in, that means the volatility is coming out, okay, and we've already moved. Let's see, what was oil? IBR on oil right now, 41.8 on 41.8 on oil. Pretty good IVR. So decent volatility on oil overall. And if the 3 ATR bands are starting to tighten a bit, okay, that means volatility is coming out of the trade. Now on the weekly here, the bands are pretty wide. On the daily, they're obviously a lot more narrow, but I like the fact that they're curling in here on the daily. That gives me really good comfort that I think this is a good opportunity to put some strangles on oil. Okay, and then gold, it's kind of a similar setup to oil. You've got a sideways move. You got MACD and RSI falling on the daily, and falling on the weekly. So this has been in a bit more of a downtrend. It's breaking this trend, but is the move getting old? I mean, we're not oversold, but look at these 3 ATR bands. We're dead center of them on the daily, and we're a little bit skewed to the upside on the weekly with both of these bands pointing higher. Okay. Does that mean we're going to rally? Not necessarily, but I think it sets up well to strangle gold here. So I really like where we are, as well as copper. I think copper, the bands are tightening. These 3 ATR bands are tightening on the weekly with the market selling, it's selling off. And then on the daily, we are MACD and RSI selling off. So you've got copper dropping. It's dropped pretty good the last, really the last 2 weeks, pretty good drops in copper. I think that's creating some pretty good opportunities in copper with an IVR up around 68. So good IV on copper, making it a really, really good trade. I think it sets up well for a strangle. If we're looking at the weekly here, you're dead center of the ATR bands. You're right at the 21 EMA, sitting right at dead center. Okay. When you're right near the 21 EMA, you're pretty much the center of those bands because those bands are a multiple of the 21. Excuse me. So I like copper. I think it's a really great trade. It's one of my favorites. And then if we look at bonds, okay, bonds have been moving up as of late, but in the last couple sessions. But overall, bonds are in a bit of a down move weekly. MACD has been rolling over, and RSI might be starting to tip over. Daily, sideways movement. We're right in the middle of the bands on the daily. We're at the upper end on the weekly. So I think a little bit more of a pullback here would be great. However, I like bonds here. I think they could move sideways for quite a while. And if we're looking at bonds overall, IV is about 22, IVR is 22. It's not terrible, but I think it's tradable. So that's where I'm looking for on futures. Just a quick look at the sectors today. Really, only 3 sectors to the good here. So XLP, which is your consumer staples, is doing okay. XBI, I mean, these are just fractionally higher. XBI, which is your biotech, just rocketing higher and just pushing that 3 ATR higher. So biotech definitely overbought and getting ahead of itself. And then techs fractionally higher because NASDAQ was up, tech stocks are up. And you're seeing some nice improvement here on MACD and RSI on the daily, starting to move higher. We're nowhere near overbought. I think it's very constructive. I think tech stocks look pretty decent here. All right, and then at the very bottom, your gold miners just continuing to get beat, which is one of my favorites for this year. Energy stocks down, oil down, and then your materials are down, along with regional banks down a bit. Not too concerned about sectors. I don't trade most of them. Apple still struggling, still trying to bounce a little bit off of the 200 moving average and these fib levels. Microsoft still still having 2 good days in a row. MACD and RSI moving higher. Microsoft looks good, leading the techs. Amazon moving up. It looks good, leading the techs. Meta sold off a little bit today, but it's been looking pretty good. Google, I think, looks really, really nice in here. It could be ready to break out. You're right back to this previous resistance area and an ascending wedge. I think if this thing breaks above this 141-ish level, 142, you break above that, and I think Google could be off to the races a bit. NVIDIA having a couple just gigantic up days for 3 days in a row, almost gap, almost gapping up 4 days in a row, technically. Getting overbought, but it's pushing higher, and then Tesla just can't seem to get anything going. Tesla weak. Now, Tesla is also a potential strangle opportunity, but you got earnings coming up. Earnings are up on the 24th. Still got 2 weeks. That's not long enough for me to do something, but I think Tesla's interesting. All right, let's take a look at our portfolio on the session. So let's get into the meat of what we're doing here. On the day today, we ended the day with a 257 delta, which compared to our net lick is 0.06%. Again, we're very delta neutral in this account. We've consistently been under 0.1, and 0.2 is our goal to be under that. So we're in really great shape with delta. I love where we are. We're slightly skewed to the upside, but really for our trading, it doesn't matter. We're delta neutral traders. We were able to get theta on today. So our number one goal this morning was we got to get some theta going in this account. Now, the one thing I want to make sure that we cover with everybody here is that for the most part, I'm going to move things out of the way. For the most part, theta should not drive or be the main driver of your trading decisions. Okay, I know I talk about 0.4% delta. It's really hard to get to that when your volatility and your VIX are dead. Okay, volatility on S&P or on ES here, the IVR is 6. Okay, there's no volatility at all in the market. So no volatility in the market at all on what we see here, which is making it hard for us to get theta on. So I'm okay right now with theta between 0.2 and 0.3. I think we stay in that range. I feel pretty good about that overall. All right, and don't let theta drive you to insane risks here. Your most important piece is your buying power. If your buying power is under 50%, you have the ability to add more theta. If it's over 50%, don't just add and add and add till you're at 60 or 70% here. Okay? You can let the natural expansion of span margin do that. Theta is less important than buying power. Okay? It's important. And if you don't have enough theta as a premium seller here, we got problems. Okay? But you don't have to be, all consumed with getting to that theta of 0.4. And 0.2, 0.3 right now is a good number to be at. The question is, are you making money using the methods that we're teaching? And we are. We're making fantastic money. Even though our theta is a bit light, we're still making the right amount of money because our plan is built for making money. All right, so net lick jumped up to 406,528 today. So net lick is up 406,528, another new all-time high. So the 6th straight all-time high, starting off the year on a bang. While the market just flounders around. Santa rally poo-pooed out the 2 days after into the new year. And the first 5 days of the new year have been just an absolute, flush for the market. If we look at 5 trading days, really haven't, or the first week or so, really haven't done much of anything. I mean, yesterday was a big up day, kind of rescued the first week or so of trading. But really, when you look at the first 7 days since the first here, we really haven't moved at all. Hasn't been a great rally or anything else, but we are doing great right in here. BP usage 239 with a bill buying power 41,166. So our overall buying power right now is sitting nicely. Let me see, 239. Make sure we get there. Yep. Perfect. Yeah, 239,019. So yeah, we're sitting at a 48% buying power without Bill factoring in. That means we still have opportunities tomorrow to get some trades on and bulk that theta up even more. I've got some good trade ideas that I think we'll do, but I'm going to give you my 3 trades from today that we put on. And we did not close anything today. There was nothing to do, nothing to close. I really didn't look at the market at all. I think I spent 15, 20 minutes just looking at the market. The only thing I did today was I put 3 trades on. If we're looking at our profit for the year, so far we're at 94,000, or 94, that would be awesome, 9,430 for January. So that's our January so far, 94.30. Most of that profits come from a gold strangle, some oil 112s, an ES 112. We took a technical loss on an FB 112 because that was the naked puts just closing. It wasn't a loss on them. We just closed the naked puts there on two different trades, and we bought back the short puts to turn it into a Black Swan hedge. So that's one of the adjustments that we've made. We already recorded the profit on the naked puts back in December. So that profit was realized in December. So the loss on the put debit spread is realized this month. That should change. But again, these trades, the FB112 trades, they're really a break-even type of hedge that we put on. So we've got some hedges there. We've turned some into even bigger hedges. And that's exactly what we did here on this long-term 112. You can see this long-term 112 is down $130. Why? Because we modified the 112 PDS into a Black Swan hedge. So that's one of the ways we're trading that. Got some great ideas from one of our members today on how to really make some significant changes to the 112 structure instead of closing the naked puts out early. Something that we got away, but that's why you guys got to be in a group where you got smart people sharing what they're doing and coming up with unique strategies. I don't have all the answers. Okay, members coming up with some ideas. Let's bandy it about. We'll test it out. We'll see how it works. But I kind of like the idea that they came up with today. I think we'll look to implement some of that. All right, so no closed trades on the session. We're still sitting here on 12 trades for the year. So we've got 12 trades for the year so far. I think 14 on the close. It's R1 to R15. I'm sorry, 12 trades, all winners. 2 of them were NAs. So technically we are 10 for 10 on winners. Nothing closed today. And then open trades. We added some trades on in here. You guys can take a quick peek. I'm sure you'll screen capture and look through those. But we put 3 strangles on today. So we got we got short some strangles on oil. We did a strangle on copper, and we did a strangle on gold today. So we strangled 3 items. That gave us some great theta. Moved our buying power up closer to the 50% mark. We're still a little short, so we're going to get a trade on tomorrow. I think I've got some unique stuff picked out for tomorrow. So I think we're going to probably look at a put ratio spread. So it'll be a spec trade, a put ratio spread tomorrow. So there's some trade ideas. You can take a look at those. And by the way, on the one trade that I did, we adjusted our deltas a bit. So we went more delta neutral as opposed to a skewed kind of standard strangle using standard deltas. I adjusted it. In fact, that was on gold. So on gold, I adjusted my deltas on both the put and the call. On the call, I brought it in a little bit. On the put, I pushed it out a bit to give me an equal distance on both sides of the strangle. So we'll see how that plays out. So we did adjust that today, or put that trade on. All right, so there we go. Hopefully that helps for the day. Gives you some, 3 trade ideas. We did strangles, gold, copper, oil. We're going to get a put ratio spread on tomorrow. If you want to see exactly what we're putting on, how we adjust those, how we trade those, it's a fantastic trade. The 112 bear trap trade that we've been doing here for years and years and years. That bear trap trade kind of an evolution of a put ratio spread. It really evolved from an old bear trap, unequal iron condor. So an unbalanced iron condor trade was the original bear trap. We still do those. They really work well in short markets of 17 to 21 days. That bear trap trade, we're selling a call, spread and or buying a call spread, I should say, and financing that with a wide put spread. So both sides are different widths and they're different deltas away. That bear trap was the foundation, really, of me, moving to the 111 or 112 trade. That's really where that comes from. That original bear trap trade, still the same shape, same overall thing, but the put ratio spread, it's really the foundation. It all is a version of a put ratio spread, which is technically a 1-2 trade. And you can just change it to a 1-1-2 by placing that additional short put in there somewhere in between, and that turns it into a much different shape tent. But really, a put ratio spread and a 1-1-2 bear trap are essentially the same principal trades. It's just a matter of where you place that extra short put in the middle between the 1 and the 2 to turn it into a 1-1-2. And now we're looking at we've done a couple 1-1-2-2s for some smaller accounts. Gives you a pretty nice juicy trap, alleviates your buying power. And another great way to adjust is also turning this into a 1-1-1-2. And if you want to find out more about the 1-1-1-2, then come and join us in the Discord, see what we're doing. Smart people, we've added some extra channels. We've got some new contributors to the channel. It's not just me, not just Igor, okay? So we've got Candy sharing all her wisdom, running some courses as well. So we've got extra courses. We got some great new stuff happening that Candy Record is supplying as well. And then we've got 2 more contributors coming online tomorrow. So we're adding a lot of value to our members. Prices staying the same, but you can learn from a lot of different traders, trading a couple different size accounts. So come and join us, see what we're doing in the Discord. And if you like this video, please click the like button. It'll help me get the word out to more people to help them improve their trading. We're seeing people telling us that, hey, we made 30, 32% last year. Thanks a lot for all of the help and guidance. If you're not easily making 30, 25, 30, 35, 40%, okay, without stressing and day trading and doing crazy things, just come and see what we're doing. Okay, come and check it out. You can go in the description below, use the code KING, save $50 off your first month's membership. Okay, and then get in, immerse yourself in the knowledge, get into the room with smart people, because if you're the smartest person in the room, you are in the wrong room, and many of you are absolutely in the wrong room. And if you're trying to get everything free on YouTube from me and others, I'm not going to give you everything on YouTube. I'm giving you a lot of education. We're giving you a lot. We're sharing with you, but really the nuts, bolts, details, and really cool adjustment stuff that we're doing, we're going to give that to members in there. So it gives you a really great opportunity to improve your trading. Okay? Invest in yourself. Okay? You're not investing in me. I'm not going to get rich on a Discord or a YouTube. Okay? I made $9,500 this month in just this one account. Okay? It's not even my largest account. Okay? I'm here to share what we're doing with you. Okay? I'm here to hopefully change your lives to the better the way other people helped me and give back. Yeah, we make some money. It's fantastic by running a service, but trust me, I make a lot more trading and I'm sharing every single trade with you. Who else is sharing every single night their exact portfolio size and the trades that they've closed? I'm giving you it all right here so that you can see. So I've opened it up to you so you can watch our journey as we go here. If I'm going to lose, I'm going to lose. And you're going to watch me lose, or you're going to watch me win. But hopefully I'm impacting your lives as well. All right. Have a great rest of your evening. It's enough from me. We'll take care, everybody, and we will see you tomorrow in the trade rooms. Bye-bye.